Good afternoon, everyone. We're going to get started here in about 2 minutes. We got some other folks trying to join here, so just kind of sit tight and we'll start the presentation here in about 2 minutes. Thank you. All right, everyone, we're going to go ahead and get started. So thank you for joining us. Couple of housekeeping items before we begin. Everyone's phones are muted, so if you have any questions, there is a chat box at the bottom of the GoToWebinar, and you can just kind of type your questions in there, and I'll try to go through those throughout the course of the presentation. If it makes sense. If not, we'll just kind of hold those till the end, and then I'll go in order and answer the questions the best that I can here today. So again, thanks for joining us. My name is Luke Boemker. I'm with ARC Benefit Solutions. I have been with the organization for about 5.5 years, and I will do my best to cover topics that's kind of hot on a lot of our clients' minds, is what is an ICHRA and really how does it work? If you are not subscribed to our monthly newsletter, ask that you please do so. We send these out every month, usually on some helpful tips and how-tos, industry updates, health and wellness tips, etc. These go out every month, so if you're interested, you can either reach out to us at the web address or the email address that's on the screen here, or just contact your client advisor, and they'd be more than happy to get you subscribed to our monthly newsletters. So again, we're here to kind of go over what is an ICHRA and how does it work. So kind of the very basics here. This presentation is really kind of meant to be a 101 type course. So it's going to kind of be high level, touch on the pros and cons. How do you set up an ICHRA? How does it work? What are the benefits for the employer and the employees? And what are the cons of it? So on and so forth. So ICHRA defined is an individual coverage health reimbursement account. So it is kind of a group health plan that allows the employer to pay a portion of the premiums with pre-tax dollars. So you as Mr. Employer can set up a contribution amount, whatever amount you want, and the employees can use those pre-tax funds to purchase individual health insurance on exchange. So there's a lot of terms for on exchange. Healthcare.gov, the marketplace, Obamacare, ACA, on exchange, they all pretty much are the exact same thing. But they can purchase individual health insurance and use those ICHRA dollars, use that allotment to help offset the cost for their individual health plan for themselves, their spouse, or the rest of their family. The nice thing is you can have these funds, you can use them, have them payroll deducted, very similar to how your group health plan may be set up today. But the biggest difference is it's really about employee engagement, because the employees are making the decision on their health plan, and they're picking from multiple carrier options and multiple different levels of health coverage. Whereas before, really you as the employer are the one that's kind of making that decision for them. You've narrowed down the carrier choice, and then you've also narrowed it down to maybe one or two, maybe three different options. So definitely kind of putting the onus on the employees to be savvy consumers and shoppers and try to find the plan that best fits their needs or their family's needs. So why does an ICHRA make sense? There's a lot of reasons, and I'll try to cover some of them here. But the first, it's kind of simple to set up once you kind of understand the mechanics of it. It definitely allows employees a ton more options. So, if you're just looking at certain counties throughout the state of Ohio, there could be over 90, 95 different health plan options. So that is a pro and a con. A lot of options, but can also cause lots of confusion because the employees don't know which way to turn. It is definitely a budget control solution as well. So you can offer, we'll get into this a little bit later on here, but a fixed cost amount, a defined contribution. Let's say every employee gets $400 a month, and it's a way for you to budget your monthly and your annual healthcare expenses. And you don't really have to adjust that amount if you don't want to on an annual basis. You can kind of keep it locked in at that $400 amount. So it also helps you with some budgeting year 2 or year 3 down the road. Whereas sometimes in your group health plans, that's not always the way it works. You don't really know what your renewal increase is going to look like. You're hoping it's going to be under 10%, but that may not always be the case. So definitely helps those employers who are really concerned about budgeting and future spend. Another thing is it's great for industries if you have maybe low wage workers, or you have a lot of staff that may not want to jump onto your group health plan, so you have difficulty meeting what's called participation. Some group plans require 50% of the employees to enroll in the coverage. With an ICHRA, there are no participation requirements. So if you have 80 employees and only 10 want to join the ICHRA, that's fine. You don't have to worry about the other 70. Maybe they're getting their coverage elsewhere. And it is also, if you're an employer that has 50 or more employees, it is also an ACA compliant solution as well. And I'll kind of touch base on some of that here in a little bit. So as we kind of look to kind of compare, these next several slides are going to, what is an ICHRA? How is it different versus a traditional group health plan? So the first is really the cost difference. With an ICHRA, you can set a benefit budget on a monthly basis, and I kind of mentioned this earlier. There's no quote unquote surprise increases. You may not even have to increase what you're offering your employees for the ICHRA on a monthly or annual basis. Whereas your traditional group plan that you may have today, those rates can and usually do increase on an annual basis. Some more, some less than others, depends on a number of factors. But you don't have as much predictability year 2 or year 3 down the road as well. So again, from a budgeting standpoint, ICHRA really helps you understand what your total spend is going to be, and really kind of set that budget and stick to it the best you can. The plan customization participation requirements. So I mentioned this earlier, with an ICHRA, you choose your contribution amounts, the employees choose a plan to fit their needs, and you don't have to worry about participation. Again, so if you have 80 employees and only 10 want to come on the plan, that's fine. On a traditional group health plan, that might be a challenge to be able to offer that plan to your employees. You may not have as many choices or options because a lot of carriers require you to have 50% of the employees maybe need to enroll in coverage. So you may not have been able to implement a traditional health plan in the past, or you only had 2 or 3 choices to choose from because of those low participation requirements. So Again, the ICHRAs offers a little bit more flexibility in terms of offering it to the employees and not really having to be impacted if a lot of them opt out. The plans also, the networks are going to be vastly different. This is a pro and a con versus a traditional group plan. So for example, if you have employees that are spread across the state of Ohio or spread across multiple states, they're going to pick the plan that is available based upon the county in which they reside in. And some of them may have different solutions and different carrier options if they live in Ohio versus Michigan versus Florida or Missouri, wherever it might be. So they pick the plan based upon where they live. And if the employee were to leave your organization, they can keep their individual coverage and take it with them. They just may not be getting the ICHRA dollars from you as the employer anymore, but they can take over the plan and they just start paying that premium directly to the carrier. So it definitely gives them some portability if if an employee leaves your organization. Whereas with on the flip side, on the traditional group plans, you're selecting the carrier and their network, and it doesn't matter where the employees live. This is the network providers they have to deal with. So certain carriers have a better national network than others, but there definitely are pockets in certain states and markets where employees are adversely impacted because the health carrier may not have all the health systems, or may not have the children's hospital system they're looking for, or may have limited pediatric care or OB-GYNs or whatever it might be. So that makes that one size fits all approach from a group health standpoint can be a little bit more challenging if you have employees spread across a larger geographic area. And then two, if the employee leaves, they can't take that plan with them. They may go on COBRA based upon the size of your group, but they can't, stay on their group health coverage if they're no longer employed there. So, they would then have to be looking for some other type of coverage, or maybe they're getting coverage at their next job, or they're, like I said, going on COBRA, or they're having to enroll in a different individual plan on their own, or short-term coverage, or Medicaid, or they just go uninsured. So, again, some differences, some nuances between the ICHRA and the group health plan as it pertains to the network and portability. From an employee experience standpoint, I mentioned this earlier too, with an ICHRA, the employee is empowered. They are doing the shopping, they are making that buying decision that best fits their needs and their family's needs. I think it also helps with engagement in their plan because they are having to lead that charge in terms of understanding exactly how their plan of benefits work with their carrier. They need to, create their member profiles and log into the insurance carrier's portal and, make sure that their doctors are in network and their medications are covered. And, if they need prior authorization, they really take ownership of their coverage. In the more traditional setting from a group health plan, you as the employer oftentimes are required to educate and provide support to the employees on how to best use their plan. So this often comes in preventive services and wellness services, for example, where if the employee's having a claim issue or something like that, you may have to step in and help get that resolved, and you don't have to deal with that anymore. So again, with ICHRA, the employee is making those decisions on their own, and they're using the dollar allotment that you're providing them to help offset their premiums, but they're picking the plan, they're doing the research, and then they're utilizing the plan to the fullest of its abilities, and you're kind of out of the driver's seat on this. So you're just kind of there more from managing the ICHRA and the premium payment assistance, and I'll kind of go over that in a little bit. But outside of that, you're not having to help make decisions and try to negotiate rates and drive renewal costs down, things like that. You're not having to get involved with any of that. So downsides to ICHRAs, I touch on some positives, and I'm going to kind of also touch on some negatives here too. So one of the biggest negatives is really the individual market itself is there are definitely network limitations. So when you have a group health plan, most of you probably have a PPO that has a fairly dense and fairly broad network of physicians and health systems that are part of the network. A lot of the ACA individual coverage plans, their networks are limited. Most of them are HMOs. If you're in Ohio, pretty much all the plans are HMOs. Same with Kentucky and Indiana. And there are very few carriers that have every health system, every provider in their network. For example, if you have any employees in Cleveland, there's only one carrier right now that has the Cleveland Clinic in network, and that's Oscar Health. If you're down in Cincinnati and you want to use Children's Hospital, there's only one carrier that has Children's Hospital network currently, and that's CareSource. So, there are definitely some network limitations, and the employees need to understand that they absolutely have to shop around and make sure that their providers are in network because, unlike the group health plan, more often than not in the state they were in, the network is definitely going to be broader. But in the individual ACA world, not so much. Individual health plans also can be pretty expensive. The prices there's many factors involved in the pricing. Age is one of them, where you live is another. That determines which plan options are available. And every carrier has different level plans. They're referred to as the metal levels, like bronze, silver, and gold. Gold being richer benefits, lower deductibles, lower max out of pockets, but come with a higher price point. So again, just something to have to kind of shop around, and you're having to look for, network is important, and then price sensitivity. Those are the two main challenges in the individual ACA market right now. Enrollment with the employees, for the employees is a little, maybe more challenging than it had been in the past because they just had, if you selected Anthem, and for your health coverage, they just had everybody fill out the same exact application, the same form to enroll in coverage. Whereas, in the ICHRA solution, the enrollment could either be directly on the carrier's portal or through a third-party solution. So, you could have 5 different employees that enroll with 5 different insurance companies, and they had 5 different enrollment experiences. So, again, it's the empowerment of the employees there, and some employees, have never had to, make these purchasing decisions before. So I think the first time through, it can be a little bit more challenging for them. Once they kind of get the hang of it, then it's not too bad. Again, I think there is also can be a little confusing for the employer and employee at first when you're implementing an ICHRA because it is a new solution. It is something that is different. You're not accustomed to it. I think you kind of have a familiar way in which you interact with our client advisors today and the insurance carrier when you as the employer are providing the group health plans. But now the employee is more engaged in that buying decision. Again, the kind of the tables have turned a little bit on who's doing what. And then the last thing is very common question we get, an ICHRA is not intended or set up to pay for any ancillary coverage. So it is just for medical coverage and expenses only. So it is not paying for dental or vision or life or disability or any other types of ancillary coverage. So, we see it on some of our clients that have gone the ICHRA route. They will implement an ICHRA for the medical, and then they will maintain group coverage for the ancillary. And some employers have even gone to the point of we're going to pay 100% on the cost of ancillary to help richen those benefits, and then we're going to maybe have a little bit less of a contribution for the medical to help bring in some subsidies for some of the employees. So I'm going to touch on that here in just a second on exactly how that would work. So kind of a quick, sample case study on what you would be looking at and how this would work. So with an ICHRA, you can contribute whatever amount you want for the employee's HRA, health reimbursement account. It could be $500 a month, $600 a month, $200 a month. You could stagger the amounts based upon employee age. So a 21-year-old could get $100, a 42-year-old could get $200, and a 64-year-old could get $300, for example. So you do have to follow that 3-to-1 rule, but you can stagger it based upon their ages. So as they get a year older, they get a few more dollars in their reimbursement, because ultimately their coverage is going to cost a little bit more in the individual market because they are a little older as well. You can also offer different amounts based upon class. So if you want to offer more money to managers or executive staff, or if you want to offer more money to full-time versus part-time, that is something that you can do as well. Again, these things can be done. They make things a little bit more complicated in terms of tracking what you're doing and how we're doing it, but it can be done if you're interested in going down that path. But the nice thing too is you can keep the reimbursement amount you're providing the same year over year. I'm going to give you $500 this year, I'm going to give you $500 next year, and $500 a year after that, and the year after that. You don't have to always have to, how do we handle the rate increases that you might see on the group health plan? So on the right side of the screen here, an example is if you had 25 employees on your plan and you're paying 75% of the total cost. Let's just say your average spend is $15,000 a month. You come up for renewal and you're looking at a 20% increase. So you do the math, that just raised your total price up $3,000 from $15,000 to $18,000. So if you kind of do some math, your employee cost maybe went up from $600 to $720. So that's kind of what I was getting at in terms of the group market. If you're not making any changes to your plan design or shopping carriers, that's an increase that you are swallowing, perhaps, unless you're not going to pay the 75% anymore. But then that just cost shifts more to the employee. So that ends up being extra $3,000 a month or $36,000 a year in that example. Now, a lot of I think what we do on the group side quite a bit is if you're getting that high rate increase, we're trying to see, one, if we can get it down, or two, find another carrier option if you want to move to somebody else to keep your increase to a minimum. But sometimes you may not have that flexibility. If you have an employee or two that has some significant health conditions, shopping them or moving them to another carrier may not be an option. And so you're kind of stuck there and you're just trying to figure out how are you going to handle or manage the higher costs for the coverage. So again, with the ICHRA, it really doesn't matter, what the coverage costs for the employee, or the health status doesn't matter. All the individual plans are guarantee issue. So every 40-year-old that lives in Hamilton County pays the same rate unless they use tobacco products. That's the only thing that some carriers can rate up for. Male, female, doesn't matter your health status, doesn't matter how tall you are, your weight, anything like that. The only thing that really matters is your age, the county you live in, and the only thing that carriers are permitted to rate up for is tobacco usage. So again, the ICHRA is kind of a cost control measure, a predictable budgeting amount, and that's why I think some of them, some employers feel that makes a lot of sense. So some of you may have heard, in the news, kind of with subsidies and tax credits, this really kind of helps make the individual market work today. If anybody doesn't currently have group health coverage, they can go out on healthcare.gov and quote and see, the subsidies are based upon their household income. So, and number of people in their household and everyone's ages. So the older you are, the less money you earn, generally speaking, the more subsidies or tax credits you receive. And these are oftentimes used to offset the monthly premiums for the individual ACA coverage. Roughly 90% of those enrolled in ACA today are getting some type of subsidy or tax credit. And the subsidies are not just for the super, low income, if you will, those just over Medicaid. That is not who's only getting those right now. If you're a family of 4 and your household income is under $250,000 a year, people are qualifying for subsidies, some type of subsidy or some type of tax credit that can be used to help offset their premium. So a couple years ago, legislation was enacted that greatly enhanced the subsidies to help try to make the plans a little bit more affordable. So subsidies come into play on an ICHRA in only really one true solution. And that solution is if you're offering an ICHRA and the coverage is deemed not affordable to the employee, they can elect to opt out of the ICHRA and choose the tax credit or subsidy instead. What defines quote unquote affordability is if the employee monthly cost is less than 9.12% of their household income. So that amount changes every year, indexed for inflation, but that's a 2023 amount is 9.12%. I'll have an example on the next slide here on how that breaks down. Oftentimes, a subsidy can and does exceed ICHRA dollars. Again, depends upon that employee's income, their age, their zip code, who's in their household, etc. If you are an employer that has less than 50 full-time employees, there is no penalty to you if you are offering an ICHRA and the coverage is quote unquote not affordable to the employee. However, this is the big caveat here, if you're an employer with 50 or more full-time equivalents and you are not offering affordable coverage to all of your employees, then you will have a tax penalty that you would have to pay to the IRS. So for what we have seen in a lot of these smaller employers is, I kind of mentioned this earlier, they're paying 100% of the cost for the ancillary coverage, and they're offering very limited ICHRA dollars based upon the employee's household income, and the employees are receiving more money in subsidy or tax credit from the federal government than the ICHRA. So it ends up making the plan, the employee's total out-of-pocket cost lower based upon them getting the subsidy versus using the ICHRA dollars. So it's about trying to maximize the best bang for the buck. And again, if you're under 50 FTEs, there's no penalty to you if the coverage is not affordable to your employees. So there is definitely a calculation that occurs, and it is complicated. This is an example, but there are definitely calculators online to help determine affordability. So for example, if you have an employee who has a household income of $35,000 and the county that they live in, the affordability is based upon the lowest cost silver plan. That sets what's called the benchmark. Let's say that amount is $650 based upon their age and their zip code. So from an affordability calculation standpoint, $35,000 divided by 12 months times that 9.12% equals $266. So you do some subtraction. The low cost silver minus a 266 equals 384. So if the monthly ICHRA is less than 384, the employee can opt out of ICHRA and choose a subsidy because this plan would not be affordable for them based upon the ICHRA dollars they were receiving. So let's say you as Mr. Employer, we're only going to offer them $200 in subsidy, or excuse me, $200 in their ICHRA. Then obviously that's less than the 384. they can opt out of the ICHRA and choose the subsidy, and they can maximize and get as much subsidy as possible to offset their the pricing for their silver plan. If you offered them in this scenario $400 in their ICHRA, that $400 is greater than the $384. So then, therefore, the ICHRA coverage is affordable, and they are not eligible for the subsidy. So, like I said, there are some moving parts to calculate this. You're probably thinking, well, how in the world do I know, the household income for all my employees, and how do we figure out if it's affordable for everybody or not? That's a great question. That is not an easy answer. There are definitely ways for us to help calculate and estimate affordability for everybody based upon, the income that you're paying them on an annual basis. But it is definitely can be a challenge to do that. And again, those are things that we can kind of help with and try to figure out if you're really, trying to crunch some numbers here and understand, what should I offer in terms of, an ICHRA for going down that path. So again, that's probably, conversations down the road, but, things to consider in determining, A, what can I afford in terms of the ICHRA? And then, how is that going to play for my employees from an affordability standpoint? So NextSpend is a third party that we've partnered with that can kind of help with implementing an ICHRA if you want to go down that path. They definitely have some nice bells and whistles. I'm not trying to do a commercial here for them, but we've had quite a few clients that have gone down this route with them. The first and foremost, they will definitely handle all the reporting requirements and disclosure agreements that are required and necessary for the implementation of an ICHRA. The unique thing that they offer is they will pay the premiums for each employee to their requisite health insurance carriers. And then they are reimbursed on a monthly occurrence for all the employees by you as Mr. Employer. So you as Mr. Employer deduct your employee premiums with pre-tax dollars from their paycheck. And then if they're getting their ICHRA or even if they're getting a subsidy amount, that those dollars are coming out of their paycheck, whatever their cost share is. And then you aggregate, NextSpend aggregates all that amount together for your 25 employees and then sends you a bill every month for what you owe them to reimburse them for paying the premiums. So the benefits are Mr. Employee saves some money from a tax standpoint. If they're not accustomed to having to pay for health insurance on their own in the past, if it's an individual basis, that would be a bill that they'd be getting in the mail that they'd be writing a check very similar that they would for their mortgage or their auto payment or something like that. And if they're not accustomed to doing that or they're not accustomed to budgeting $1,200 a month to pay for their health insurance premium, a lot of them may end up going uninsured. So this kind of makes it look and feel and smell like a group health plan because it's coming out with pre-tax dollars coming out from their paycheck. The money comes out before they even see it, but they're all just on their own individual ACA plans. NextSpend has online tools where every employee has their own login, and that's how they validate the payment information with the carrier they've enrolled in. So it's kind of a checks and balance system. So if the employee enrolled in coverage with CareSource and their premium was $500 a month, we would help set up a auto pay function with CareSource where that money would come out of NextSpend's bank account to pay their premium. And then a NextSpend system, we would, for each of the employees' logins, they would enter in that they enrolled with CareSource, and here's the plan they enrolled in, and here's the premium, for my plan every month. So there's a checks and balance, making sure that the correct amount is being deposited and paid for the employee's premiums. If the employee has any changes in their plan. Maybe a dependent drops off, or maybe they have a child and need to add a dependent, or they get married, need to add a spouse, things like that. Then obviously those dollar amounts on that expense portal would need to be adjusted accordingly. And from an enrollment standpoint, the employee can do all this on their own, or we have a dedicated staff and team that can help them enroll. The first time through, I personally feel it can be a little bit overwhelming and cumbersome if the employees are not accustomed to shopping and purchasing individual coverage in the past, where it makes sense to have somebody help them enroll through kind of a one-on-one, Zoom meeting or consultation. If we have to, we can even have a staff member to come out on site, and you kind of spend a day or two there with your employees and help them, one by one, manually enroll in coverage. So, because it is important, it is an individual purchasing decision. There are a lot of plan choices and options out there. And, if you're not accustomed to having to do this, in a lot of counties, you could have 95 or more different plans to choose from. It can be overwhelming. So I think, the first time through, it makes sense to try to help them navigate that process. Then they kind of get the hang of it, and they may be able to, manage a process themselves, at time of renewal or the next year. So things to consider. An ICHRA can be started anytime throughout the year. So you are required to provide, if you are going down this route, I don't have it on the screen here, but you're required to provide 90-day notice to your employees that the group health plan is terminating and that you're implementing an ICHRA. So, if you wanted to do this, let's say by June 1, you would have until the end of this month realistically to notify your employees. Next, Ben requests that all employee enrollment is confirmed by the 15th of the prior month. So if you're going for that June 1 effective date, everything would need to be completed by May 15th. You can, drop your coverage anytime throughout the year on the group plan. The downside is, though, if they're coming from a group plan and transitioning to individual, there is no deductible credit. So if they've hit any out-of-pocket expenses in the past year, unfortunately, those do not carry over. So they would kind of be starting again from scratch on their individual plan. So things to consider if you may be contemplating this for a mid-year change. If you want to just set it up on January 1st, 2024, again, that everything would have to be completed by December 15th, but that could be done, and that could line up nicely for the calendar year. Even if you decided to go June 1 or July 1, sometime in the mid-year, you wanted to implement the ICHRA, the plans will still renew January 1st. So they would be on those plans for roughly 6 months. And then all individual ACA renews every year, January 1st. So again, you'd kind of be going through that process again in about 4 or 5 months, depending upon when you enrolled in the ICHRA, to pick their plans for the upcoming year. Every November 1st is when enrollment begins for ACA for the upcoming year. So kind of during that time frame is when you're going to know if the employees want to make any plan changes. And there's obviously going to be some premium adjustments here and there for them. And if maybe you want to adjust the ICHRA, subsidy, ICHRA amount up or down, or if it's not affordable, their subsidy amounts could also change on an annual basis too. You see the bullet here, spouse involvement and household income are also important, because that household income can help determine, the subsidy calculation. But there's also ways where, if it's affordable for the employee based upon the employee's income, but if the spouse doesn't work or there's multiple kids in the household, it could make the ICHRA not affordable for the rest of the family. So one of the nice things in some legislation that's changed in the past few months is the removal of what's called the family glitch. So, the spouse and the kids in this instance could receive a subsidy, even though the employee is getting the ICHRA dollars that you're providing them. So they could kind of take the best use of both options and alternatives. And we definitely had that scenario play out for a couple employees with a group we helped enroll for January 1st. And again, enrollment assistance, I think is really needed, the first go around for the employees. It's just a lot to consider based upon the carriers, the plan types, the network, medications also can be important, and understanding if the coverage is affordable, and do we take a subsidy or not take the subsidy, and the subsidy is only based upon affordability only, and most employees do not understand that at all. They want to go in there and just instantly put in their household income, and I'm getting $800 in subsidy, but my employer's only giving me $400. Well, if the ICHRA was affordable, that $800 is not going to be something they can receive. And if they opt to take that subsidy, they're going to have a pretty big tax bill they're going to have to pay Uncle Sam the following April. So that's why we kind of really feel strongly that the employees definitely need to make sure they're doing things the correct way, and that they are fully understand the options that are available to them and how it works, because it is different. It is a little bit more complicated the first time through. So next steps, if hopefully this kind of concludes the presentation here today. I would say this is something you're strongly considering, you're interested in learning more. Please connect with your client advisor, your account manager. I think a personal consultation to go over your needs and your employee needs, and understanding exactly the mechanics and how things work is really kind of the next step. The deeper dive into pros and cons, because every scenario is different for every employer group. A lot of this hinges upon if you want to do classes, you need to have so many people in each class to be able to do something like that, or just understanding the under versus over 50 employees and kind of what that threshold looks like, or trying to estimate affordability and is there any tax implications for your group, and timeline, and where do my employees reside, and their income levels. A lot of factors involved for sure. But a lot of people look at it as, all those things considered may outweigh and make it a better option for us than the group health plan we have today. And others are saying, this doesn't make sense for our business and our employees, and we're going to prefer to just kind of stay where we are and do our best to manage the group health plan the best that we can. So hopefully you found the information I provided here today informative. Hopefully I didn't thoroughly confuse anybody. If you guys have any questions at all, feel free to type them in the chat box here. If you think of anything later on, please reach out to your account manager, client advisor, and they can direct them to me if needed. And I can, help out as well on this. So we'll make sure that, everybody gets a copy of the recording and the presentation here too. So just you have things for reference points. And, I think there's a lot of information out there online too. NextBen, like I said, is kind of the entity we've partnered with. There are other partners out there too, but they all have different nuances. I haven't seen anybody that really has that premium payment functionality set up like NextBen has. That is why I feel like they have a pretty good solution, and they have a really good understanding and handle on how to implement ICHRAs and the way they work and interact with everybody. So again, appreciate everyone's time and attendance here today, and thanks for joining us. We'll have future monthly webinars coming up. So if there's any other topics that you guys would like to learn more about, please let us know. We're doing these on your benefit and your behalf, trying to help educate our clients and help you guys make the best informed decision you can for your businesses and your health coverage and your employee benefits for your employees. So thanks again, and enjoy the rest of the week, and enjoy the Super Bowl on Sunday. So take care.